Okay, good morning, everyone. You're most welcome to today's episode of the Market Snapshot. So we have today's Wednesday, the 22nd of November, and we've been having quite a lot that's been happening in the markets since the week began. I think the major highlight, of course, for today is yesterday's FOMC minutes, which seem to have changed the sentiment a little bit. Yesterday, we received the FOMC meeting minutes from the most recent federal press conference. And the minutes that we had indicated that the market seems to have overestimated the direction of the Fed, where it had been undergoing a bit of a rally from November, and that rally is actually still on even up to today. We are seeing it on a number of assets. If you check on gold, you're seeing how gold is moving. We're also seeing the same thing also taking place on some other assets like EURUSD, like the pound dollar, the NZ dollar, AUD USD, BTC USD, and also some of the other indices like the German 40, as well as also the NASDAQ. So the reason for that rally has been that the Federal Reserve, which is the central bank in the US, could possibly be coming to the end of their tightening cycle. And if we check as well also on the CME tool, which normally adjusts itself to incoming data, rather to data that has been released, it's also indicating to us that there's a possibility of the Fed keeping rates on hold. So the reason why we are seeing the dollar undergoing a lot of selling, the US dollar, is majorly because of this tool here. And the tool is factoring in the current sentiment. Now, when we got yesterday's Fed minutes released at about 10 p.m. East Africa time, what we saw was that the dollar put up a bit of a rally, and that could also be because there was not that much discussion from the minutes. The minutes really didn't indicate that the members of the committee were looking towards rate cuts. I think the dot plot that came from the past meeting showed that the earliest that they can start cutting rates is going to be around June next year. So the first rate cut possibly could start around June next year. And the markets had priced in a possibility of a rate cut happening as soon as April. So we are yet to see what is possibly going to come out of that. Going into, of course, what we are seeing today. For today, of course, we have gotten some data coming out for the crude oil stock, which came out at midnight 30. And you can see that the weekly crude oil stocks have actually been piling up quite nicely. And that could also be one of the reasons why we are seeing the oil prices moving down like the way they are. The reason for that is because there seems to be a bit of weakening demand generally. Normally, when oil prices sell like they're selling, it's a pattern to show to us that there's some kind of disinflation that's happening. But also, we're able to see that with the CPI numbers. We got a CPI number from the US last week, where we saw a decline on CPI. We're also seeing CPI declining also in the other economies like the UK, as well as also in the Eurozone. So it's not a surprise that actually oil prices are moving the direction that they are moving. It's likely that we could potentially see more weakening oil prices. The other thing also to mention on that is what's happening also with Russia and Saudi Arabia. They seem to have indicated that they were going to stick to their targets at least to the end of the year on cutting the amount of barrels which they're going to be producing every day. Russia had said that they would stick to about 300,000, but based on what has been going out, we are seeing that actually they are way above that target. So it's likely that was also putting a bit of a bit of downside for oil. So we can also see that this data we got here, we are seeing that the oil stock increased by about 8 million barrels. So that is actually a very big increase in oil stock. And also also should help to bring oil prices down a little bit more. So tomorrow we have a bank holiday in the US. We have the Thanksgiving. So the US markets will be closed tomorrow. They will also be closed partially on Friday, and we expect that that is also going to have an impact on the volumes in the market. So I think, having said that, it's likely that today might be like, could potentially be the most active day that we'll have this week. That is also Friday, since the markets will be opened also on Friday. The US markets, that is, but they will close earlier. Yeah, so for today, the major event we have is the jobless claims. We are going to get that data coming out at 3:30 East Africa time, and rather at 4:30. And of course, the jobless claims numbers have really been trending nicely between 200K and about 300K. So that there might not be that much of an impact for the jobless claims. However, if we see a number coming in higher than the 225, and also possibly above the 231 that we got previously, we could get some dollar weakness there, which of course will indicate, that there are more people that are claiming or are filing claims that they don't have jobs. Yeah, so going later into the week, we have the Michigan consumer sentiment, which is going to be released at 6 p.m. The Michigan sentiment is essentially just to show to us what the consumers are expecting of the economic conditions. There's also a sentiment which points to consumers, which also focuses on consumer sentiment. The other one focuses on inflation expectations. So I think the surprise that the movement that we saw last week on the US CPI, for those who traded CPI, you'll notice that there's a way the market reacted more than it was supposed to. And I believe that is attributed to the dovish stance that the Fed has been putting out in the market. And it's also what we're also seeing with the rallying that we're seeing on the gold, on GBPUSD, on EURUSD and all these different assets. So even these 1 year inflation expectations, I'm expecting that they're going to come in much, much lower, indicating to us that most consumers are trying to price in the possibility of lower inflation. But also, even also with the way the bond yields are trading in the US, it gives us some kind of indication that there could be some kind of a slowdown coming in. And the Fed minutes that even came in yesterday also alluded to that slowdown that is likely later into the year. We also shouldn't forget that next year is an election year in the US, which usually history says that it's normally a year for a week. Whenever we have elections, we normally have a weaker dollar. So we should also make sure we factor that, especially as we are planning our trading. So at 6:30, we also have crude oil inventories, and we're expecting crude oil inventories to come in slightly lower, almost by about 2-point-something million barrels. Of course, this will also help us to see how the US has also been managing its inventories. Yeah, so Wednesday is a relatively quiet week. On Tuesday, rather on Monday, we had the 20-year bond auction, which also put a bit of a dent on the dollar's potential rally. I think the only thing that has helped to sustain the dollar to move higher was the recent Fed minutes. So the bond auction indicated there was a lower yield rate. It came in, I think, at about 4.7 from about 5.2. So that could also point towards lower yields for the US 10-year. I think you're seeing how the US 10-year is trending, and that could also feed also to the price of the dollar. Awesome. So I think let's cross over to the charts and see what's really happening on the charts. So let's cross over. I think we'll start with GBPUSD and see what's happening over there. Okay, so for GBPUSD, we are going to look at it on the 1 hour time frame. So on the 1 hour time frame, okay, so for the 1 hour, of course, for those that were able to listen into the market's outlook that we had on Monday, we had indicated that this is what we are seeing happening on GBPUSD. GBPUSD has been in a downtrend all the way from the 13th of July. And it then got into a bit of a deadlock from September all the way up to October. So right now it has begun its uptrend. Okay. And it's likely that this uptrend looks quite strong. And much as we had a very, very nice move up from last week's CPI, it did not in any way change the previous trend for the GBPUSD. So some people might attribute this move higher to the CPI, but you can also see that we've been seeing the cycle showing that it's sort of in an uptrend. We're having those higher highs printing quite nicely, and we're also seeing that the shorter period moving average has also stayed higher than the 200-day, so which is a very good indication that GBPUSD could potentially be moving higher. So it failed to maintain the level at 1.25, and that level has given it a bit of a hard time. Last week when we had lower CPI numbers for the Great Britain, we saw this sell here, and immediately what happened is that we saw a very nice break, which also came in line also with a move higher over the 50-day. You can see the 50-day moving average gapped quite nicely above the 200-day, showing us that the uptrend was building nicely. It's likely as we go into December, we might get a few catalysts that could maybe, sustain the move higher for the pound. And we'll also need to get some clarity from Powell on the 13th of December, whether the Fed is actually looking towards ending their tightening cycle. So I think 13th December is going to be a very key day for any move higher for the pound dollar. But I'm thinking for now, we could see some ranging, I think under 100 pips. I don't expect the pound to have that much move higher. Could just range a bit, maybe move a little bit higher. And we could look for some scalping opportunities, especially below 1.25 and buying it upwards to 1.26. So you can also see that when we broke out of this range, that was above this level here at about 1.23. The pound has been in a very nice uptrend. So I'm expecting that this is likely to continue, and we could potentially get a break that could take us at least above 1.27. Now, speaking, of course, on the fundamentals for this pair, when we saw the CPI numbers that we had last week, the Prime Minister, who is Rishi Sunak, he came in and made some commentary and said that the UK had been struggling with very high prices, and having lower CPI numbers is not in any way a sign that the economy is actually struggling, but it could be that the financial conditions are getting better for the households or for the consumers. Yeah. So still, that is a good thing, and it could also support the pound higher against the dollar. So crossing over to NASDAQ, yesterday we had NVIDIA earnings, and NVIDIA actually had an earnings beat. Their revenue came in higher than the estimate at about 18 billion versus 16 billion dollars as the estimate figure. And of course, NVIDIA has been in a bull market this year. It's up over 200%. And being one of the major stocks that contribute to the movement for the NASDAQ, it's likely that NASDAQ is going to have a lot of move, could potentially continue to move higher. So we had a very nice wedge here, which formed on the NASDAQ on the 1 hour. And you can see it broke up above it. That was on Monday. And right now it's still holding a very tight range. And I'm expecting that maybe as we continue later into the day, we could potentially see NASDAQ still have a nice break and move upwards to 16,000. So the other thing I also need to mention is NVIDIA, I think, was one of the highly anticipated earnings releases, given the fact that the earnings cycle for Q3 is largely done. There are not so many stocks that traders are waiting for to release their earnings. So this at least should be one of the big catalysts for NASDAQ that could push it much higher. So when we go on the higher time frames, one thing that at least I've observed is that NASDAQ is very, very strong, has very strong momentum to move higher. And right now we've taken out the high that we created in August, rather in July. And this level has held since the week began. So NASDAQ is in uncharted territories for the year. And that means that anytime from now, we could see it making fresh, fresh yearly highs upwards to 16,000. So crossing over to the Dow also has been on a very nice uptrend. We had a nice break of our ascending triangle here, which we drew last week on Friday. It stayed in a very tight range, holding onto its gains from the CPI. And I'm expecting that the Dow is going to keep ranging there and, trend nicely upwards. There seems not to be that much of a market reaction from the FOMC minutes. I had earlier thought that if we, given the fact that the minutes indicated that the committee members of the FOMC had indicated that they were going to keep data, have an approach where they just wait for incoming data to guide their future decisions. I think that is what has actually helped the risk on assets not to have that much of a negative reaction. So we could potentially see Dow trending and continue to trend higher. If you were to see here, you can actually see that the 50-day moving average is trending quite nicely above the 200-day, which shows us that we are in some kind of an uptrend. And the good opportunities for trading today for the Dow could be looking for some scalps to the upside, keeping a very tight stop loss somewhere below this level of 35,000. And of course, since we don't have that many catalysts that can make the Dow to sell, it's either going to range or start trending higher as we go into the holiday tomorrow. So for gold, I want to just mention that I just want to point us to the gold futures market, which has been showing signs that a lot of the settlement prices for gold on the futures is above 2,000. So many of them are pointing above 2,000. So that could be one of the reasons why gold has gotten into that territory and does not look like it's going to leave it. Let's just go over here, just a moment. So there's a set of expiries for the futures. We have the first set coming out, I think, on Monday next week. And of course, based on what I've checked out, I've seen that the expiry for Mondays has a settlement price, I think, of about $2,008 an ounce. And I feel the price that we are seeing on our CFD's platform has something to do with on the futures market. If most of these settlement prices are indicating that we are going to have, the anticipation is that we get higher settlement prices, then it's likely that could also put an impact for gold, and we could potentially see gold trending nicely higher, potentially going towards at least maybe upwards to 2,000. Likely also upwards to maybe 2020. So as you can see, generally most of the settlement prices are above 2,000. One of them, the one for November, is currently showing 1999.3. I think it trended slightly lower, but yesterday it was actually looking towards 2,000. So I know there is not that many headlines we are getting in from tensions from the Israel-Hamas conflict. So which means gold is actually not moving higher based on its safe haven status. It's just moving higher because of that impact from the futures market. So I think since the expiries are happening on Monday, which is I think going to be the 27th, we should then see how gold reacts next week. We could potentially see, a much higher price or a much lower price. We just have to keep monitoring there to see what happens. Okay, so crossing over to the chart for gold. On the daily, I had a very nice line that I drew from when we had the SVB crisis. So if you go on the daily, you see that the top for gold was 2,072. And I had just been observing on the daily whether it's likely that we are going to get another lower high for the year. And I think that is what is currently in play. Now that gold has somewhat settled comfortably around 2000. Previously, when we reached these levels, it was a spike that would take it there. Most times it would not even hold that level for long. But now the price action has been steadily keeping itself above 2000. And if gold settles or closes today, at least above 2000, it's likely that we're going to see it trending upwards. And we are going to have another lower high for the year, which is likely to form somewhere around here. If we don't get that lower high this week, especially as we're going to the slim volume days of Thursday and Friday, it could form sometime maybe next week, and that could mark the lower high for the year. I don't envision gold breaking above 2072 unless there are some catalysts that could, push it that level, but I don't see it moving there. Previously, and of course, even with the previous years, when gold reached those levels, it would immediately sell. We saw that in March, we had a very nice liquidity sweep to the downside. And we're also seeing the same thing is also possible for gold. So I think for now, traders should keep a bullish outlook on it. And of course, maybe if you're doing any kind of swing trading, now would be a good time for you to actually get some nice bargains on the price. It's likely that we are going to see gold potentially moving upwards to 2010, upwards to 2020, as dollar weakness continues. So right now, the USD is not looking too strong. And of course, this is now helping gold to benefit from that weakness. Yeah, so we should see it trending nicely higher. And of course, if we get stronger jobless claim figures, that will allow gold to move upwards to the level which we saw around the time when we saw escalation for the war in Israel, rather in Gaza. That level, we saw that level around here. That was 2008, somewhere up here. Okay, so we are going to see it possibly moving up as 2008 and potentially breaking higher. So that's it for gold. So let's just cross over to Euro USD. Just a moment. Okay, so for Euro USD, on the daily, the Euro USD almost has the same chart like the pound dollar. The only difference between the pound dollar and the Euro USD is that for the Euro USD, this is what we have. This is what we have on a daily. We saw it having one single point at which the market had a reversal to the upside and a very strong change of trend. We had a downtrend that took it to this area of 1.04. And ever since we touched this zone, Euro USD has completely changed its momentum. And you can clearly see here, it's actually now on an uptrend. So, however, we have still a very big fair value gap on the higher time frame, which I think is yet to be filled. We tried it sometime on Monday, where we had a bullish flag forming. This bullish flag formed, I think, around the time when we had just a moment. Okay, so the flag is right here. When we had a break above the flag, we saw how Euro USD moved quite nicely. So I'm expecting that we're going to have a retest of this zone, which is not so far from current prices. I would put it somewhere under 150 pips within this FVG zone. This zone was created from the CPI. So I'm thinking we are not going to have a straight upward move on the Euro USD. It's going to be hovering a little bit here, and likely we are going to have some healthy price action that takes us back to this zone. So I'm thinking if we revisit this, then we are going to have a nice spike that's going to take us much higher. So Euro USD is in a very strong uptrend, and that is simply because the market has been pricing in rate cuts by the Fed, and of course knowing that the interest rates in the US are much higher than Eurozone, if they start cutting rates, it will actually be bullish for the euro. right? Yeah, so we should potentially see the euro moving higher. And of course, the trading for today, right now you might have a bit of a bearish trade on gold, rather on euro USD, potentially going back to this range here. If this continues, then we should see it coming and clearing this gap and then having its next move to the upside. So crossing over to silver, silver has also been trending upwards quite nicely. We had a very nice bullish flag on the H1 time frame that silver was able to break above, but it's also hesitating a little bit, especially around this area here of 1.2415. If it manages to take out this zone here, then we could see higher silver prices. But right now we're in uncharted territories. So anytime price fails to hold at this area, silver could potentially break lower, and we should see a nice sell that will allow us to have a trade on it much lower. So something like this is possible for silver, and we could potentially see it moving back to 2.3255. So if you have any questions, guys, please type in your questions in the Q&A because I'm about to switch over to the questions. Okay, so let's see what questions we have. Yes, good morning, Joseph. I hope you're doing great. Hey, Just Squad, how have you been doing? It's been a long time since I've heard from you, Just Squad. I hope trading is going well for you. Hey, Edward, I hope you're doing great. Just Squad, you're saying, how do you know you're a good market analyst? Okay, yeah, how can I answer that? I think there are many things. I would expect, for me, I think the main things would be you'd have to sort of like have an all-round understanding of things, what's happening in the economy, good understanding or solid understanding of technical analysis, fundamental analysis, but also sentiment, I think is very, very important. You have to have a good understanding of sentiment and essentially what drives sentiment, or what are the drivers for sentiment in the market. Yeah. Yeah, so Tripsked, you're saying, did the FOMC affect the dollar? Yes, it did. It actually did, because a lot of the commentary that we got from the FOMC pointed or was giving us some kind of clarity that the markets were a bit, or had gotten a bit too ahead of themselves. They had actually priced in rate cuts, yet the Fed hasn't actually yet indicated to us when that tightening cycle is going to change. Remember, if we check, of course, the tool will show us that there are possibilities for rate hold or possibilities for rate cuts, but until that actually happens, it's only a mere speculation. Yeah, but by far and large, the minutes indicated that the Fed is looking at staying restrictive. And of course, that is actually dollar bullish. So we should see that move play out even as we go in later into the day, and possibly also into next week. Okay. So Jeremiah Miner, you're saying, how do you compare gold futures to gold trading? Yeah, so using the gold futures is very good, simply because it will give you sort of like it's like a conditional indicator of how the open interest is. So usually when you have higher settlement prices, it usually shows you that it's likely that most of the people that are dealing in gold are pricing in a potential higher price. So what that happens is that we usually then see a kind of change in trend, and we should see trend also aligning with what's happening in the futures market. So it's always important to check, because it usually gives you some kind of indication of where price is likely to go. Yeah. And of course, if it's something to explain, many traders are asking themselves, why is gold where it is? You can't justify that just from the FOMC minutes. You can't justify it from a potential end of a tightening cycle by the Federal Reserve. It has a lot to do with what's really happening in the market for gold. Yeah. Okay, so I don't know if there are other questions. Let me just check. Yes, yes, Edward, you are saying yes, tomorrow. If I'm not mistaken, tomorrow is Thursday. Yeah, and Thursday there's a holiday in the US. Uh, so it's in the US, but it does not mean that the markets are going to be closed. Only the US markets will be closed, right? So we're talking about the stock market, okay? Uh, and of course, some assets that you'll also be trading on the FX Pesa platform, like the stocks, those ones will not actually be available for trading. They will be available for trading on Thursday. But even on Thursday, the session will close earlier at about 1 p.m. US time, which in our time for East Africa is about 8 p.m. Yeah, so that's what you can look out for tomorrow. Okay, so I wish you all an amazing trading day, and I hope to interact with you all over the next week when we meet for the snapshot. So I'll see you next week. Cheers, guys, and have an amazing trading day.